Good morning, everybody. Welcome back to another market open, and also welcome to the first day of May. We are here, folks. We are in the 5th month of 2024. Kind of crazy. I mean, it's kind of insane. We started 2024 like it was yesterday. I feel like, I don't know, put it in the chat. Do you feel like the year has been moving quick? Because to me, the year has been moving incredibly quick. And we're already in May 2024. Another month will be in June, which means we'll be halfway through the year. And I feel like June's going to come relatively soon. And then next thing you know, we'll be in the Christmas, Thanksgiving season once again. Like, it's kind of crazy how quick time moves. But we are here, first day of May. A lot to discuss. Markets took a nasty, ugly turn last night. And I have a few reasons why I think they took a nasty, ugly turn. And we're going to see how those markets either recover today or continue to take a nasty, ugly turn. Jobs data. We got some jobs data this morning. That's good data, but it is kind of bad for inflation, even though it's good. Markets are ticking up a little bit on this jobs data, so we're going to talk about that. We have Bitcoin that is at 58,000. I mean, it's $5 away from 57,000, and it last night it hit 56,479. Now, not seeming to be a magnet at that $60,000 level. That's also messing up a ton of stocks. I mean, that's hurting Robinhood, that's hurting Coinbase, that's hurting CleanSpark. All these companies are getting hit. MicroStrategy is $46 away from being below $1,000. It is pretty rough in terms of the broader equity market and the crypto market. Oil prices are down, which is one good thing. 10 years at 4.7 still, or 4.67. But the big news of the day, and we'll talk about Amazon earnings, because Amazon, AMD, Starbucks, SMCI, they all reported. We're going to talk about that. We have a bunch of other companies that reported this morning that we have to talk about, like MasterCard, Pfizer, ADP, CVS, Wingstop. None of these companies matter. None of the macro matters, because the only thing that really matters is one guy that's talking, and he's going to be talking, and I'll be live at 2:25 p.m. to stream every syllable that he utters, which is going to be Jerome Powell. Jerome Powell will be talking, and I think the reason why the market is scared, and the reason why a lot of companies that had phenomenal earnings yesterday aren't able to go up, is because of Jerome Powell, and the market's pretty damn scared of what the hell he's going to say. So we're going to talk about Jerome Powell, see what he could say that could screw us, see what he could say that might not screw us, and that actually makes it a really good day. So thank you all for being here. Got a lot to discuss. Let's get into it. Jagger, Harvey, Young CEO, Broccoli, Bob, Ty Gordon, Katie, Kyle, Dougie Fresh, Jay Powell will be live at we'll get the decision at 2, but 2:30. That's when we actually have to hear him talk for the next hour. Deacon, Miami, Ren, June, James, Chris, Brian, Felicia, Bay Ray, what's up? What's up? Satark, Max Im, Luke, Benny, Mark, Mitchell, Body, Daryl, Sam, happy birthday. Thank you, Sam, for the happy birthday wishes. I appreciate it. Tesla Bull, Christian, are you covering a Novix? Yeah, after hours we'll cover it. We're probably not going to listen to the call unless everyone really wants to, but I'll cover the earnings and we'll see what they say. Lord Gorban, Lifted Monk says, yo, say my name. Lifted Monk, what's up? Thank you for being here. Hector, Spicy B, Daryl, Miguel, Open Skies, Sean Foley, what's up? What's up? All right, let's get into what we've got to talk about. Walt as well. Thank you for the happy birthday, guys. It means so much wishing me happy birthday. It really just every single day that it's my birthday, I realize that, I'm going to outlive everybody. I'm going to be like 300 years old at one point, since every single day is my birthday. So thank you guys. I really, I really appreciate it. Vinny, Nolan, Juan Carlos, Walt, Scrurry. Thank you guys for being here. Okay, so let's where did you get this framed Tesla certificate? I didn't show you guys on the market open. Let me play this video real. Well, actually, I could just show you. I don't need to play the video. So I had a bet with Derek, friend of the channel, and this will be fun to start off with this, and then we'll get into the macro, because we need some good news before we get into all the bad shit that's going on. The bet with Derek was that if Tesla goes up after earnings, I get a share. If it goes down, he gets a share. But it's not just a share; it's a physical share. So it's called giveashare.com for anyone that wants to buy it. I think Derek ended up paying like $500 for this thing. But this is an official share of Tesla stock. Now, I was bearish on Tesla. I thought it would go down after earnings. But he thought it would go down too, so I had to take the opposite side of the bet. And so I said, all right, fuck it, it's going to go up. And so I got a share. Now, the best thing about this Tesla share is that you're allowed to give a quote at the bottom of the share. And this is the quote that this guy picked. This is the quote. It's hey, Emeka Kraja, go F yourself. Love Derek Wall. Now, why did he say go F yourself? For two reasons. Number one, he was upset that he lost the bet because he really thought Tesla was going to go down, and so did I, but I just happened to be on the other side. So he was upset about that. Number two is he thought the stock would go down because Elon told the world to go F themselves, right? So he kind of thought like everyone hates Tesla stock at this moment because Elon basically just told everyone to GFY. And so this quote is a commemoration of the share. And hopefully the stock is worth $10,000 one day. And I'll tell my kids, Uncle Derek gave us 10,000 reasons to go F myself. And I'm never going to sell it. I'm going to be a Tesla shareholder for life. Like, do I really want to go through the process of going through the central committee or whatever that's in these like terms of service and selling the share? Like, no, I want to hold this forever. So I will literally be a Tesla shareholder for life. Maybe we put it right there. Yeah, maybe we do something like that. So yeah, that was pretty fun. And I will always be a Tesla shareholder. And hopefully Kathy is right that in 5 years it's worth $2,000. Sir, thank you for the $5 super chat. Really, really appreciate this. Sir also says, Mick, can you please alert us when you're out of your hood and SoFi spreads? Yes, I will let you guys know once I'm out of the hood and SoFi spreads. Some of the hood spreads are 2025. The other ones are 2026. So the 2025 likely I have to get out of sometime in the next 6 months. Based on how the company performs, macro performs. 2026, I'm just not selling, right? Because they're very deep in the money and I just don't need to sell, right? I have so much time. But 2025 ones, I will likely sell, and I'll let you guys know. And SoFi ones, I'll let you guys know as well. Obviously, I can't sell them now because fucking SoFi. We'll talk about them as well. But I'll keep you guys updated. All right, so let's get into what happened yesterday. A bunch of things happened yesterday in the context of the macro, and I think we need to discuss. Well, first we'll discuss earnings as well, and then we'll keep going from there. So let me pull this up real quick and get this in place. So we had earnings yesterday for 4 major companies, and the major companies were AMD, Amazon, Starbucks, and SMCI. Now, all those earnings went relatively well outside of Starbucks, and we'll talk about them. The problem is the market just wasn't able to meaningfully react to this. So let's pull up this chart, and then I want to read some numbers to you guys, and we'll keep going from there. So Amazon crushed on their earnings, 17% AWS growth. Overall sales are up 13% year over year, which is just hard in the context of Amazon. SMCI, you can see, is down 9% right now. And Amazon's up 2.6%. So AWS growth 17%, overall sales up 13%. Operating income, this is the biggest thing I think everyone missed on the earnings, is at 10.1%. Amazon's operating income is larger than it's been, or it's bigger than it's ever been since 2021. Which is insane, dude. Their operating income is like how much you're actually making on every dollar you're getting at the end of the day. And their percentage is 10.1%, which is, we wanted to see those margins go up because it's a retail heavy business outside of AWS. And when you're selling, laptops or water bottles or whatever, there's not a great margin on Amazon.com, especially with the third-party sellers. So the fact that Amazon was able to get those margins up is amazing. $10.4 billion in net income, up 325% year over year. Why is this thing up only 2% and it's struggling to even be up 2%? Because Jerome Powell speaks. At one point, it got to it was up 6%, and then immediately it just retraced. If they reported the same day Google reported, I think Amazon would be $190 right now. No question. They didn't need to give a dividend. The earnings were good enough. Their AWS growth is faster and better than GCP and Azure. And now their AWS run rate is $100 billion trailing 12 months. I mean, dude, $100 billion trailing 12 months on a business that's this mature is absolutely phenomenal. Their advertising business as well, continuing to tick higher. So Amazon just crushed it. I mean, there's no reason you would sell the stock today on that type of news. But the market just can't give it that much momentum. Starbucks, on the other hand, had declining sales in North America, declining sales in China. They closed down a bunch of stores. They missed on their revenue estimates. They missed badly on the EPS estimates, almost by like 12 cents. And the market punished them pretty aggressively, down 12%. From the people I talked to over the past 24 hours, most people feel this is a Starbucks problem, not a consumer problem. The consumer is healthy. By the way, if you're just joining, we got some jobs data, 192,000 U.S. private payrolls versus 180,000, 12,000 people more than expected continue to find a job, 192,000 overall. Now, maybe these numbers are revised in the next few days, whatever it may be, but people keep finding jobs. Unemployment likely is going to keep staying low, which not the best for inflation, I guess. We're going to find some other ways to navigate with inflation, but people have jobs, right? So if 192,000 people found jobs in the past month, it's not a consumer problem. They can afford a $5 cup of coffee. It is a Starbucks problem in particular. And that begs the question of what the hell is Starbucks going to do to try to address some of these concerns or potentially cut costs in a different way. SMCI 744, they're down 9%. The only reason I think SMCI is down, they're growing 200% year over year, is because their margins are up only 100 basis points at 15.6 versus 15.5. So it's like the margins are not amazing. It's a hardware business, but it does show that NVIDIA demand is stable if they're able to grow 200% year over year. But it doesn't seem like the street is excited. And like, dare I say, they kind of feel SMCI is a bubble that is up 7x in the past year, but really has not shown the potential that they can grow these margins in an aggressive way, even if they're growing the growth, because that growth is kind of already priced in, given the thing is up 8%, right? Or 800%. So I think that's a little bit of the concern right there in the context of SMCI, and that's why we're seeing that down 9%. Now, NVIDIA is not down as badly. NVIDIA is down 1.49%. It's still holding 850. The bottom here was like 776 last Friday. So we're not really seeing the crazy sort of sell-off of all semis companies because of SMCI, but we are seeing a little bit of bad momentum. And then you got AMD, of course. AMD 150 down 5.23%. AMD was just a bad quarter, and we knew it would be a bad quarter, especially because of what we got last time from their guidance. I mean, they were down. Let me share this right here. I mean, look at this chart right here. I thought this chart was bad. We'll talk about Bitcoin as well. Bitcoin is not having a good day. Look at this. They were down 11% on revenue, down 12% on profit. They were flat across gross margins and operating expenses. And this is quarter over quarter. Down 89% on operating income. They were down 5 basis points for operating margin. They were down 82% for net income. They were down 83% for diluted earnings per share. I mean, they were just down on everything, right? And they said they would do this. They said they would do this last quarter. I remember reading this with Jose on our semiconductor podcast, and we were just like, damn, AMD's not going to have a good Q1. And then somehow on February 15th, the stock goes to 225. And the only reason I felt at that moment that was ridiculous is because I remember I was with Jose, who's like a semiconductor expert. AMD's the second largest holding. And I remember us doing the podcast and him telling me like, yo, like this is not a good quarter. Like this is horrible guidance. And then I'm seeing the stock surge from 130 to 225 in like 3 weeks, or like 180 to 225 is some ridiculous surge. I'm like, that doesn't make sense. That's not supposed to happen. And so we definitely had a little bit of froth in February, right? And that froth has been worked out of the system, which I think is overall a good thing. If you're long on, AMD, this is not going to scare you from buying AMD, but it's good to not see AMD at like, $250, $300, because that's just when it makes sense. NVIDIA is a whole nother issue because they can grow, but AMD really is not showing those growth rates. So that's the earnings update from yesterday. NVIDIA is down, SMCI is down, Starbucks down, Amazon had a great earnings, but they just weren't able to really capitalize because of some of the macro stuff going on. Pinterest up 15%. They were up 20% at one point. Pinterest was, they increased revenue 21% year over year, and they increased MAUs to over 500 million at 518 million. Incredible growth from Pinterest. They're up 15%. We'll see if that holds as Powell speaks, but their numbers were just kind of undeniable, and that's why the street was able to reward them, which is what should be happening, right? The street should be rewarding companies that are undeniable. And that's what we got in the context of Pinterest. Someone said, Chris says, is it time to buy QQQ puts? The interesting thing about being super bearish now and getting scared of the markets is that I don't know if this is the time to get super scared. One could argue that all the reasons are out there. QQQ down 0.35% today to get scared. But let's go through some of the good reasons, right? Let's go. So let me pull up some of the good reasons that we have going on right now. So S&P right now, 500.93, okay, down 0.21%. What's good? Well, oil prices are coming down at the lowest level since February 5th. Okay, so let's show this right here. Oil is at the lowest level since February 5th. That's a good thing. I mean, look at this. WTI is 76 cents away from going below $80. Like, that's not a joke. Like we're below, but into the 79 range. That is a world in which oil starts to get cheaper and potentially prices at the pump start to get cheaper as well. So we have oil going down. Chris has, been talking on this channel plenty of times. I think 2 weeks ago, he was on the Market Open basically saying that new housing inventory and the construction of that inventory is starting to go higher as well. And so even though there is a lag in the economic data around shelter, eventually that is going to take its course. And then Q1 earnings have been great. Like Starbucks, not the best earnings, but it seems like that's a company-specific issue. Domino's, great earnings. Chipotle, great earnings. Chipotle's up 33% year to date. Like it's better than most of the big tech companies. All the big tech companies, including Amazon, Microsoft, Google, Meta, they crushed. We have Apple left on Thursday. We'll see what happens with Apple, but all the big tech companies crushed. Tesla, didn't really crush earnings, but definitely laid out a vision and they're making progress. We have a lot to talk about with Elon Musk as well. There's some X drama happening on Twitter in regards to him and following some accounts. And so every big tech, and then Nvidia is probably going to crush as well, killed it. So Q1 earnings went great. Shelter and oil are coming down. The Fed today, in my perspective, they're just going to say we're looking for data. I don't think they're going to be ultra hawkish. I don't think they want to cause a ridiculous recession. Like, I don't think the Fed wants to do that. I think they want to get inflation down. And if inflation's sticky for the next 3 months, they might have to say they have to create a recession, and then they'll start acting as aggressive as people want them to, as the bears think they're going to get. I don't think they want to do that yet. I think they want to give a couple more months to see, can inflation come down naturally on its own, even though growth is slowing down a little bit and people still have jobs. So they want to see, is stagflation real? Are there signs of stagflation, or can we get inflation down while growth is continuing to grow? And so I don't think they're going to be that aggressive, which means I don't know if this is the best time to get bearish on the market. Or this is the best time to be super scared, along with, having $6 trillion on the sidelines. I don't know if this is the time to be, all right, S&P is going to 4,700. It's time to short. Now, granted, if S&P went to 4,700, not the worst thing in the world. That's a 10% correction. That's something reasonable that we need to see. We had to run very quickly, very fast in regards to the S&P. I mean, if we just look at the year to date of the S&P, we were at 465 on January 4th. We topped out at 525 on March 28th. So literally within 3 months, S&P surged basically 13%. It really makes sense to have this correction right here. And the fact that it's not based on companies not putting up numbers, but rather based on something dumb like inflation that hopefully and eventually will die out, I think is very productive. And I think is at least a signal of some type of strength in the economy. So that's what we got in regards to the macro. Kathy Wood did buy 45,000 shares of Palantir yesterday. Just pointing that out. I saw Palantir in the chat. So Palantir, she's buying. She didn't buy 23 and above for my understanding of her buys and sells. So I think 22 and below is when she buys. That's kind of like her basic price. And she bought 45,000 shares yesterday. She bought 345,000 shares over the past 2 weeks. Okay, earnings. Let's talk about some earnings. So let's pull up some of these earnings numbers. I'm going to read them out to you guys and go to their charts as I read them. So we'll get to see how some of these companies performed in the morning. Okay, so let's start off with MasterCard. MasterCard earnings, they beat on EPS by 2%. They beat on revenue by 0.3% or 0.13. And again, a beat is all we're looking for on the top and bottom line to continue the streak of S&P 500 companies putting up good numbers. MasterCard is down 2%. Maybe guidance wasn't the best, but they had a beat on EPS and revenue. Pfizer, they beat on EPS by 57%. They beat on revenue by 6%. Okay, let's see Pfizer. I think it'll be up like 1%. Pfizer's up 2%. Okay, not bad. So Pfizer showing a little bit of momentum here. The stock's at 10-year lows, so I'm sure the street wants to see some excitement here. ADP beat by EPS by 3%, beat by revenue by 0.65%. ADP in the pre-market is up 0.87%. CVS Health. CVS, they missed on EPS by 22%. Oh my God, they missed on revenue by 99%. Okay, that's not good. CVS is down 13%. Okay. CVS kind of like Walgreens, right? They're all struggling. They're all struggling pretty badly. Does CVS pay a dividend? CVS, do they have a dividend? Yeah, they have a 4% dividend. Yeah. Okay, so some of those struggling a little bit. Again, I think that's more company. I don't think that's like people don't want to shop at CVS or I think people don't want to shop at CVS or Walgreens because they're shopping at Target and Walmart, right? Like a lot of the things you buy from CVS and Walgreens outside of the pharmaceutical stuff, you can buy from other places, right? So it's like maybe it's just not the most exciting place for consumers to go. I don't know the last time I've been to a CVS, and there's a Walgreens nearby, but I don't go to Walgreens that often, right? So I think maybe that's more company specific stuff. Wingstop, they beat on EPS by 28%. They beat on revenue by 7%. Wingstop was already up a lot this year. Wingstop, wow, up another 3%. Wingstop year to date. Let me know if you guys eat Wingstop. I think I haven't had it in like 2 years, dude. There's not a lot of Wingstops nearby. Wingstop stock year to date is up, wow, 52%. Look at that. It's performing, it's beating the NASDAQ from last year. Goodness gracious. Not bad. Not bad at all. Wingstop up 3% now on some good numbers. So that's good. And then what other? Oh, we had Riot in the morning. Is this was the Bitcoin miner. Riot is up 0.2%. Riot, they beat on EPS by 271%. They missed on revenue by 7%. And it makes sense because, Bitcoin has started to go higher. So that's the update on earnings that we had. Nothing too. Oh, we did have Kraft Heinz, right? Oh, KHC. Okay, so KHC. Let's see these guys. They're down 4%. Why? They beat on EPS. They missed on revenue. Buffett has a lot of KHC. So again, companies are either beating or coming in line with expectations, which is the most important thing. And if that's the case, then I think that's really all that matters, regardless of what the stocks end up doing. So that's what we got going on in the context of earnings. Let's transition to crypto. This thing is bad, dude. I was up. If you guys saw, I tweeted at 3 a.m. I tweeted last night, and I was just like, what is going on? And Bitcoin liquidation is going on. Bitcoin is down, and it's down pretty bad, dude. My reasoning for why Bitcoin is down, this is my uneducated opinion, but hopefully still logical opinion. And I think the numbers will basically prove why Bitcoin is down so much. This stupid halving event didn't really fucking do anything. Look at the ETF inflows. Look at April 30th. We got 3 million into ARK-B, and then BlackRock lost 35, or sorry, BlackRock got 0. Fidelity lost 35. Bitwise lost 34. Grayscale sold another 93 because these guys have an unlimited amount of Bitcoin that they can just keep dumping on the market. And the inflows have stopped. I mean, BlackRock has not gotten inflows for the past 5 days. So now, granted, the market's turning a little bit, right? So do you really expect people to dump money into a Bitcoin ETF when the market's turning? Probably not. This is the one disagreement I have with a lot of the Bitcoin Uber bulls. They're like, it's a hedge. It's this. It's like, no, it's not, dude. We need a good economy and a good market cycle for animal spirits to give Bitcoin love. If we don't have that, then it's dead. Like, it is what it is. It's not like gold, right? But regardless, I think if we get that spirit back, and maybe Jay Powell instills some of that spirit back in the economy, as he says that he's still on track to think, we'll get these rate cuts this year, which, yes, he's kind of said, inflation is really hard to progress over the past couple of weeks in different conferences, but I don't think he's going to be uber aggressive like his Fed president partners. I think they have a different mission. They want to instill fear so that the economy can slow down a little bit. That's not what Jerome Powell does. So I don't think he's going to be ridiculously hawkish. I think he'll be hawkish, but not like to the point where everyone's like, oh my God, this guy's like going to, run us off a cliff. I think it's going to be pretty normal, and the questions are going to be answered in a pretty normal way. If he can do that, maybe we get a little bit of a surge in Bitcoin and growth assets. But as of now, it's tough. It's tough to see what it looks like right now. Amazon getting a little bit of steam. Let's go to Amazon. Amazon up 3.85%. Yeah, again, look, I wouldn't be surprised to see Amazon rally today. The market should be smart enough to buy Amazon. They deserve it. They 1000% deserve it. But it might take some time. Now, MicroStrategy has been pretty tough, dude. MicroStrategy has been pretty tough. MicroStrategy is $39 away from going below 1,000. This thing, it was at $2,000. Yeah, literally, it was at 2,000. Now it's at basically 1,000. And that was because Bitcoin went from 72 to 57. Now, if Bitcoin does the rebound, which I think it will, and I think this is short-term pain. Remember, after the halving event, we've talked about how it needs to fall 6 to 10% before it does the rebound. So I'm still very bullish on the long-term thesis, at least for the next 6-7 months. And I think Bitcoin will be fine. But the short-term equities will take a hit. Like even Robinhood. By the way, Robinhood's credit card app is live now. You can download it on the App Store. Even these guys are down 5% from yesterday, 1642. These guys, I think if Bitcoin dips to 55, this thing is going to 14. At the end of the day, Robinhood is still pegged to Bitcoin. As great as the results are going to be, I believe, in the next few weeks, they're pegged to Bitcoin. And so they're going to have a hard time. CleanSpark is at $16. Coinbase right now is at, Coinbase under 200. Now, granted, I think a lot of people are going to buy this dip, dude. I think a lot of crypto longs that have not lost their faith in Bitcoin, they're going to buy the shit out of this dip. So we'll see how long it lasts. But I think people will take up opportunity at cheaper prices. Marathon at 1581. It's gonna be tough for the crypto stocks today. It's gonna be tough. It's not gonna be easy. If Jerome Powell makes it clear that he's not cutting, then or he's not cutting anytime soon, then it's just gonna be tough. It's just gonna be tough. And we want to see a little bit more momentum in inflation coming down for Jerome Powell to feel that cutting is necessary. So that's what we've got right now in the broader crypto market and what we are seeing. And we're going to see where it goes from there. Let's get an update on Amazon and kind of where Amazon is going. Here is Brad Erickson giving us an update on why investors are finally starting to see a bit more of the Amazon and if that will play out in the stock over the coming days. Here we go.
maintained your price target of 215 and your rating of an outperform for Amazon. Kind of surprised you didn't raise it after that report. We just heard some of those comments from Andy Jassy. Still implies a 20% upside, but why are you and apparently investors, stock's only up 2%. Why aren't you more impressed by what we heard?
Yeah, good morning, Frank. Yeah, so I think in some cases, things are playing out kind of exactly as we would have thought and exactly as a lot of the bulls would have thought. And so I think that's maybe the reason maybe the stock's only up a couple percentage points, despite the fact that it was a very, very good report. I think on the other hand, I think this is a stock where people are sort of seeing the bull case, if you will, prove out, right? Seeing that they can accelerate cloud, seeing that they can make money on the retail business. And as they get more proof points, that's a stock that can sort of grind higher. In some cases, we don't always need to see a stock re-rate on every single earnings, right? Steady Eddie is kind of a nice pace sometimes, and we think that's what we've got here.
All right, I don't want to play both sides of the coin. That's John Ford tomorrow on Squawk Box. But I do want to play a bit of devil's advocate. Why isn't this stock actually lower on the guidance? If there's so much AI demand, why is the guidance kind of mixed going forward?
I think that from the top line perspective, I think the retail business, Andy, CEO, talked about how the customer is trading down a little bit. So I think there is probably a little bit of stalled growth there, weaker than people might have thought. But the reality is, they're still hitting their operating income estimates on that part of the business, and the cloud business estimates are definitely going up here this morning. So I don't think,
and that's what mattered. Cloud going up is really all that mattered, and investors, I think, are happy about that.
On a net basis, you put that cloud piece together, the earnings piece together. That's the formula for a higher stock price here.
We still have Apple left to report, of course, but when it comes to mega cap tech names, has this, in your mind, repositioned Amazon when it comes to this so-called AI arms race? Do you have a different opinion about where they stand today than you did before this earnings report?
Not really, actually. Amazon has been our favorite name of the big caps, the three, Meta, Google, and Amazon, that we cover for this year. And I think coming out of this earnings season, I think we obviously got a big boost here after their report last week. But I think there's more yet to come here with Amazon, where what we're really pointing people towards is this is a situation where the operating income and ultimately earnings and free cash flow, this company has the biggest opportunity to see those ramp over the next 2 or 3 years. And we think this year is a critical component of that, where, from a run rate perspective, for example, they did $60 billion of earnings before income taxes last night on a run rate basis. We think that number is going to 70, 80, 90, 100 over the next, call it, 3 years. That's pretty powerful. That's why we like it.
Amazon's going to win. They're not going anywhere. The question is going to be, is the market going to reward them in the meantime? And I think the macro needs to hold up for the market to reward them. One thing about Amazon is they hit 188 in July 2021, and then they came down to this 88 range, right? And then eventually, kind of V-shaped recovery backed up to this 170 range. So they have basically doubled since the bottom. Same thing with Google. And so markets might be a little hesitant to continue to give them the premium, given, they bought the stock on the way up, and seeing it chill out and be flat, which is basically what's happening with Microsoft. Microsoft's been flat all year. I mean, it's up, but it's just not, moving aggressively because it's richly valued. I don't think Amazon's necessarily richly valued, but it hasn't moved a lot throughout the year. Like Microsoft year to date is up 5%, dude. It's not a lot. Amazon, I think, is up about 20% year to date. Amazon, 16%. So market's going to have to see if they can continue to give that momentum. How is PayPal red? Okay, so we talked about PayPal yesterday. We had that earnings. PayPal's red because of the market. I mean, none of the things in the earnings showed me that PayPal should be red. PayPal had an exceptional quarter. Alex Chris literally said, CEO, I hope you hear the reinvigoration in my voice, dude. As soon as he said that, I was like, wow, this guy is basically acknowledging that he messed up last quarter and on the earnings call, and he's excited. The only reason I think PayPal is red is because Jerome Powell is scaring off the market. I mean, the broader entire market is red right now, right? And so PayPal is going to be no exception to the sell-off. But 9% revenue growth, market was expecting 6.6. Payments volume was about 8 billion more than what the market expected at 404. MAUs went down a little bit, or total accounts went down by like 1 million, but the active accounts went up by 2 million, and the transactions per account was at 60, which is up 13% year over year, which is all that matters, right? Are people actually using the product at the end of the day? And EPS, they beat. So they had a great earnings, and the CEO really laid out a vision. I was really happy to own PayPal after listening to him. I think the stock will get closer to that 75 range once things cool down. It really depends on J-Powell, dude. Like, that's why we'll be live at 225 today. If J-Powell can just get the market to feel that things are okay and that inflate and that cuts are coming, because right now his Fed presidents have basically gone out, said we won't get a cut till March 2025. Bank of America came out with that statement the other day. And as a result of that, I think a lot of people have been scared that like Powell actually thinks we're not going to get a cut. And if he sounds like that, even if it's subliminally under his voice, it's not going to be good. I don't think it's going to be like that. I think he's going to be okay. I think the market's actually overreacting a little bit in the short term and we'll be all right. But then again, maybe we are due for a 10% correction that we haven't really got. We tried to get it on the S&P last time, 2 weeks ago when Nvidia dropped and we got to 492. We tried to get it. Iran, Israel, all the catalysts were lining up, but we didn't get it. And that's because people wanted to buy the dip. Maybe that ends up not being the case. Amit, do you think Block will beat on earnings? I think so. Block had a really good earnings last quarter. They've done a ton of things in the context of Bitcoin over the past couple of days. I think they just rolled out this new feature where I don't know I'm forgetting the feature, but it's like you can get paid back in Bitcoin or something, like Bitcoin back cash reward, something like that. I think Block's going to do well. They had a really good quarter last time and Jack Dorsey killed it on the call. Okay, let's talk about Tesla. Let's talk about what the heck is going on in the world of Tesla. So I know some people at Tesla, and things are a little weird in regards to how Tesla is operating right now. And the biggest thing, right? And this is why things are weird. Elon is gutting some of the charging team, and a lot of people that work on the charging team are kind of scared, because they're like, their jobs might be gone soon. Tesla has gutted its charging team in a new round of layoffs, despite recently winning over major automakers like Ford and General Motors. Tesla's supercharger network has long been seen as one of the greatest competitive advantages. It's widely available, has far better uptime than other charging networks. But CEO Elon said on Twitter, he wants leaders to be absolutely hardcore about headcount and cost reduction, as he ordered them to cuss more employees who don't obviously pass the excellent, necessary, and trustworthy test. Now, this information was leaked. This Elon memo about being hard on layoffs, that was leaked. And as a result of that, Elon unfollowed someone on Twitter. So Sawyer Merritt, one of the biggest accounts on Twitter, about 600,000 followers, someone has said, hey, curious, Elon, why did you unfollow Sawyer? I suspect he breaks more news on Tesla than what employees are telling you half the time. And Elon says, don't post leaks of confidential information, which is the quote I just read about Elon basically telling his senior managers to be very diligent on cutting costs, and that means cutting employees. Don't post leaks of confidential information and expect me to follow. So Elon's pissed off. Elon's mad that these Tesla accounts that he's buddies with are being annoying on Twitter and basically leaking all of his information. Will Jameson, one of the charging team leads, let go in the cuts, said in a post on Musk's social media platform. Let's actually go to the post right here. Confirmed, Tesla has let our entire charging org go. What this means for the charging network, NACS, and all the exciting work we were doing across the industry, I don't know yet. What a wild ride it has been. It's kind of weird why Elon's doing this. Kind of weird why this is happening. Rango still is okay. I've spoke to Rango. He's good. So thankfully Rango's all right. You guys know Rango's a friend of the channel and he's okay. But I mean, I don't know. We'll see how this ends up playing out. It is very weird that this ended up happening. Now, Elon did say that he still plans to expand the supercharging network across the world, but that is just going to happen a little slower than expected. I'm going to try to pull up his exact tweet in terms of what he said. But it is a little weird, right? Now, granted, I think Tesla needs to do this. Dude, they're burning $2 billion a quarter. In 10 quarters, they could theoretically go bankrupt. So obviously they need to do something to cut costs. And this might be one of those things. Yeah, here's this tweet. Tesla still plans to grow the supercharger network just at a slower pace for new locations and more focused on 100% uptime and expansion of existing locations. Basically saying, hey, we're trying to make our regular platform better instead of expanding right now, which I guess is the case. But people need supercharger networks, right? Like we like those have to expand. There was this quote from someone from Hawaii yesterday. Let me see if I can pull it up, that Elon responded to, basically saying, hey, dude, I have to drive like 10 hours just to get to a supercharger network, which is ridiculous in Hawaii. And Elon said, yeah, we got to look into it and fix that. Let's see if I can find that post. It's in the midst of all of Elon's replies to the socioeconomic and political state of planet Earth. Okay, I can't find it, but like, yeah, Elon was basically saying this is not good, and we've definitely got to work on this stuff and fix it. So interesting stuff in the context of Tesla. Now, what does that mean for the stock? The stock obviously has taken a little bit of a hit over the past couple of days. So Tesla right here is down 5.5%, down another 1%. Now, look, it surged from 138 at the bottom at April 22nd, went all the way up to 198.87. And then reality kind of set in and the market calmed down. They were like, well, things are probably not as good as we think they are. The numbers were definitely disgusting for Tesla. So we definitely got to take a little bit of a break. And then them cutting off more people and the macro getting hit, that also, made it tough for Tesla. Is this a question of buying the dip? I don't know. Because I don't know if this is the dip on Tesla. Like this is where it's tough to be a Tesla shareholder, because where exactly is the dip here? Was 138 the dip? Some of the OGs believed in it, but a lot of people did, like myself, said 125 is happening. And then is this kind of a short-term top, or is this a small dip before we make our way back to 200? Because again, the rally to 198 was not on anything fundamental. It was on the news of FSD and China that broke literally on Monday, right? As Sunday night. But it wasn't the numbers. And we know it's not the numbers, right? The numbers are just not good. So it's going to be very interesting to see how Tesla in particular performs. Again, it's rate sensitive. If Jerome Powell says we're not going to get a rate cut anytime soon, that might be a little tough as well for the rate cuts, or for Tesla as well, to see if we'll get rate cuts. And so we'll see. We'll see how that plays out. Robots will build the charging station and plug in the robo-taxis. All is well. Hopefully, if Elon's optimism ends up becoming true, maybe that's how it plays out. Elon said millions of robotaxis in 2020. They're going to be beaten on FSD. I mean, I get it, but I also think the reason China even allowed them to build a partnership with Baidu to eventually create FSD in China is because no other company, even though the market can perceive Elon and Tesla being late to FSD, no other company has the data or the proprietary advantages over Tesla. Waymo, Cruise, none of these guys really have what Tesla has. BYD definitely doesn't have it, right? Mercedes doesn't have it. Like, it's Tesla. And so no matter how long it takes, if that is the bull case, that is the bull case. But it will take some time for that to play out. And I don't know if 200 is that easy to get to in the short term, especially with what's going on in the context of the Fed. So we will see. We will see how it plays out. Savici says, admit it. We love buying things when they're overpriced. When it's on sale, we ain't looking. Yeah, dude. And I'm susceptible to that. I'm sure people in the chat are susceptible to that. It's tough. It's really tough to buy things when they are down. Is not easy, which is why people deserve the gains when you buy things when they're down, because you buy things against the entire world telling you to not buy them. Let's go into some analysis on what's going to happen with Fed Chair Powell. We got 6 minutes until the market opens, and let's see what some people have to say. Cal says, Amit, the Mars pet care is going to feed us Domino's today, and I remember what you said about Domino's, so I won't eat. Yesterday on the market close, I said if you eat Domino's, you might die. I don't even know what word I was trying to say. I was just like stepping over my words. I didn't mean to say die, but so now the insider is that if you eat Domino's, you'll die. Which technically, I mean, you're getting closer to death if you eat Domino's. It's not healthy food, but yes, you can eat Domino's, hopefully without worrying about dying. All right, let's set some analysis here on what's going to happen with the Fed. Market open in 5 minutes.
Two-day policy meeting concludes today. For more on that, in the recent corporate borrowing spree, let's bring in Megan Graper. She is global co-head of debt capital markets at Barclays. And I guess once again, we're going to be listening very closely. Megan, what are your expectations? I can't imagine we hear, yeah, not today, but we're getting closer. We're getting closer. Would he ever say not today and we're not getting closer?
Yeah, I mean, I think Powell's in a bit of a bind. I mean, he's going to have to acknowledge that data has been disappointing in the press conference. And I think while he's likely to downplay the possibility of outright hikes, he's also going to have to manage to walk back some of his past comments about the extent of policy restrictiveness. And without a new dot plot on offer, I think his comments are likely to skew a bit more hawkish here this afternoon and lean towards this need for tighter financial conditions. So I think they dropped the "at some point this year" language that he referenced in the last meeting as it relates to sort of the dialing back of policy restraint.
We're not at 50-50 yet on hikes versus cuts, are we?
We're not. I think it's just about delaying the inevitable here, which is, in other words, if we don't see sustained declines in inflation over the coming months, we think the Fed is likely to push back to an initial cut at the earliest. I think that materializes is in September, but I think it's predicated on the basis that core PCE slows into the summer. So, I think we're just as likely to see that first cut slip to December. If there's even a slight hint that inflation has yet to subside.
Do you think inflation, A, is going to continue to come down? And B, why is it coming down? Because we're in restrictive area. You said when you say inevitable that we eventually cut, I just don't understand why it's inevitable if we don't. Maybe we'll see something in the ADP numbers, but if the economy continues to stay strong and if inflation stays sticky, I just don't know why it's inevitable that the next move is down.
No, it's a great point. I think some of this ties to the Fed being loath to sort of risk losing credibility with the market at this late stage. I mean, I think equally there's a compelling case that higher for longer will in and of itself contribute to further tightening over time, and that should reduce the need for rate hikes. So I think sitting tight here for a prolonged period, even if that's into the turn of the year, is probably the right course of action. I think that they are going to want to avoid a scenario where they sit too long and then start to create cracks in the market. But I think they've already suggested that they've got time and can afford to wait and see and to gather more information before they make that determination.
What can you tell me about just the overall lending environment, corporate and bank and elsewhere? I would imagine rates are tracking the 10-year and the 2-year back up. At this point, the dollar is starting to wreak havoc around the world in other currencies. There's some dislocations that are occurring. Are any of them troubling or going to get out of hand?
I mean, for the time being, I think what you're seeing in credit markets is, in the face of this very material market repricing and higher interest rates, that credits remained surprisingly resilient. That is in large part tied and supported by underlying yields that are still near post-global financial crisis highs. So, investment grade, you can still clip 570 on the index there. In high yield, it's closer to 880, even as spreads remain tight. And that feels, comfortable, I think, and an opportunistic entry point for a number of investors we're talking to, because the growth picture has created this incremental cushion, I think, for borrowers on both sides of the rating spectrum, so both IG and high yield.
You think?
I agree with relatively what she's saying. Her argument is just like Powell's going to have to navigate the rising 2-year or the rising 10-year with the 2-year in the context of inflation. Again, the 2-year is signaling that we do have room to cut. The 10-year, not necessarily. So we'll see, dude. We'll see how this plays out. Today, 2:25, I'll be live. We'll see what the Fed decides to do, and they're going to have to make a decision. Hopefully that decision is not the worst decision. 9:30 a.m., May 1st. Month of May. Thank you, everybody, for being here. The stock market is now open. Wake your ass up. Here we go. What do we got in the world of the broader equity markets? Tesla green. Tesla's green, 183. Tesla is flat, but also green. Not bad. PayPal's down 1%. Marathon's down 0.65%. Coinbase is down 2.3%. Robinhood is down 0.49%. CleanSpark's down 1.71%. MicroStrategy's down 3.55%. Amazon, nice pump, up 3.5%. We'll see if it holds, but good for Amazon. Good for Amazon shareholders. They deserve it. So nice to see Amazon getting a little bit of love right here at this 180 range, up 3%. Wingstop, they had good earnings, up 2%. ADP up 2.85, makes sense. Pfizer's up 3%, not bad. Pfizer has been due for a little bit of a bounce. S&P relatively flat, not down too much. Pinterest up 17%. If you had calls on Pinterest, congrats. Those are printing very nicely. So Pinterest doing well. Hershey's is down. Cacao prices finally started to come down, which is not bad. And cacao is the main ingredient, basically cocoa beans that goes into chocolate. So that coming down should be a surge for Hershey's over the next year. But Hershey's right now down a little bit at 192. It topped out at 270 back in 2023. SoFi is actually green. Wow. We've got some green candles on SoFi. Incredible. I did buy a couple more contracts yesterday, dude. I think 680 is stupid. I think that this is a company that had an amazing triple beat. They do not deserve to be at this level. They just don't. I know, yes, is it just the bank? Yes, it's just the bank. Still, just as a bank, I don't think they deserve to be at this level. And they do have other parts of the business that are growing, even if they're not growing substantially. The company, I feel, is still oversold. Does it go back to 5? Yeah, it's possible, but I don't think that's happening, dude. I don't, and maybe I'm wrong, but we'll see. We'll see what happens with SoFi. SoFi right now, slightly red, just now down 0.37%, but basically flat. Nvidia, let's check on Nvidia. How's Nvidia doing? Nvidia is down 1.45%. Okay. Starbucks should be down pretty badly as well. Starbucks, wow, down 14%. Starbucks taking a hit. Starbucks taking a beating. PayPal down 1.8%. Again, guys, to me, that's not their earnings. They were at 73 yesterday before they fell. This is macro. This is until Jerome Powell calms people down. It's not going to be the best. Robinhood turning green right here, 1657 on Robinhood. Coinbase as well, down 1%. So the dip's getting eaten up from 198 here to 201. Let's go to big tech, the Mag 7. Apple's red, Microsoft's green, Meta's red, Google's green, Amazon's green, Nvidia's green, Tesla's red. They're all basically flat though. They're not like red green. They're not like super down or super up. Amazon right here up 2.47%, so not bad. And then let's go to semis. What do we got in the semis? So AMD got hit. Let's go to AMD and how bad AMD is currently doing. Intel is down 0.43%. Intel's 35 cents away from going below 30. SMCI, wow, SMCI down 12%. Oh my God, Powell's speech is at 2:30. I'll be live at 2:25 Eastern Standard Time. Wow, SMCI down 13. AMD is down 8%. Oh boy. It's a blessing. NVIDIA's only down 1.4%. Goodness. ARM is down 2%. Broadcom is down 2%. ASML is down 1%. ASML also had a crappy earnings, but that was more quarter specific and ASML specific, but that wasn't the best earnings either. Intel, we know, had a crappy earnings. So far, every semis company basically had a crappy earnings, except Taiwan Semi. They had a great earnings. They sold off because they had too much demand, right? They told the market they can't even service the amount of demand they're having. Which is a good reason, I think, to sell off. And then AMD had a bad earnings, so they're off. Wow, SMCI is down 14%. Oh my goodness. And then NVIDIA hopefully will have a great earnings and recover some of this, but SMCI is getting nuked. SMCI didn't announce something that was that bad, though. Like I feel like they're getting sold off because the market's just like the market's just like, well, this growth is unsustainable, right? But they didn't issue any guidance or something crazy that would signal SMCI deserves to be down 15%. Not in my opinion. Jay Roberts says, new Robinhood shareholder. I bought 10 shares yesterday. So one thing about Robinhood, for those that have the app, the 1% match is live for some people. It's not live for me, but a bunch of people were posting on Twitter yesterday. The 1% Roth IRA match where you sign up and you can every dollar you deposit, you get 1%. That is officially live for a bunch of people. So if you do have your app or if you update it, you might be able to start getting 1%. Also, they have a brokerage transfer match that's going to be live till June 28th. So they brought back the whole transfer from Schwab or Fidelity, and you get 1%. So here's the thing about Robinhood real quick, and then I'll move on. They just brought back the brokerage transfer match, right? Why does that matter? That matters because people keep so for SoFi versus Robinhood, I was like, guys, Robinhood's deposits are exceptional compared to SoFi, and that's something to think about. And people are like, oh, well, Robinhood's just paying people, and so that's why. It's like, first of all, yeah, no shit, they're paying people. Second of all, they're not going to stop paying people. And based on, the economics that we looked into in the context of Robinhood, the reason they can keep affording to pay people is because they're a technology business with fixed costs, which means the yield they get on their assets. Remember, the more assets you get on your platform, the broader yield you get. You can afford to keep giving people money. So right here, they just tweeted 34 minutes ago, the 1% bonus is back. Earn your uncapped bonus when you move over an outside brokerage account to Robinhood. Initiate a transfer by June 28th. And then in the next couple of days, for everybody, the 1% brokerage is going to be match is going to be live. Also, one thing that's also interesting on this is Crossroads tweeted about this, that it looks like they're going to give it to you all at once. It looks like they're not going to make you wait. Look at this. How to earn the 1% bonus in individual account. Instant money. The bonus will be automatically added to your account once the transfer is complete. So maybe you don't have to wait 24 months to get the monthly payment of the 1%. I don't know exactly what the details will look like, but the point is they're going to keep giving people money to keep coming to the platform. And ironically, the more people that keep coming to the platform and that become gold members to get the 1%, 3% match, whatever it is, they're going to put more money into the platform. It is a compounding effect of money that comes onto the platform, which is something I don't necessarily think SoFi has. They have direct deposits, but the one thing that's also annoying me about SoFi is SoFi Green right now, 1%. They say they have 8 million users. How many of those users are real? Like I'm a user of SoFi, but I don't check the account. I don't log in, right? And so like at least Robinhood gives you the monthly actives and tells you how many people are monthly active, because there's no way 24 million people are monthly active, right? Even though they have 24 million accounts. So it's SoFi. I mean, put in the chat, what do you think? Is it 20% of those 8 million that are active? 30%? 10%? What is it? Because I think that signals also why deposits have not been necessarily exploding, and why, maybe the engagement on the platform is not as great, because those accounts just aren't, accounts that actually use the platform. And I'm sure SoFi is not disclosing that because they don't want to disclose that, advantageous to them, but still one thing to think about in the context of a shareholder. Nick says, but you have to give that percent back if you leave 24 months or so. That's correct. If you leave within 2 years, then you're not going to get the match. But the thing is, if you get onto the brokerage and you bring a ton of money, I mean, most people are going to stay, right? Like that's just like, there's no reason to leave. And so I think it makes a lot of sense. And I think that's going to keep exploding deposits, which is all that matters for these brokerages. They're competing with Schwab and Fidelity, dude. SoFi is trying to compete with JP Morgan and Bank of America. These are multi-trillion-dollar banks and brokerages. Like, how are you going to compete? Like seriously, how are you going to compete? You can't just tell me, you're going to run some Instagram ads or you're going to, be the bank for millennials. Like, no, dude, you got to give people money. You got to give people something they care about. We all care about money. And I think Robinhood is the right strategy. SoFi is a different strategy, but I think that's the sort of difference between their approaches to deposits. PayPal down 2%, Tesla down about 0.7%, Coinbase down 1%, Amazon 180 up 2.9, 5%, Kraft Heinz down 3%, big Buffett stock, their earnings were not the best. They are down. Pinterest still up 15%. Nice that Pinterest is maintaining those levels. If you're just joining, private ADP payrolls came in 192,000 versus 180,000, 12,000 more jobs were added to the economy than expected. Oil also fell down about 0.5% on the day. That's why the S&P 500, it's flat. S&P at 501 versus below 500. I think it's because labor is good, unemployment's low, people have jobs. Those jobs are going to lead to the consumer spending money. Even though inflation will be sticky, if people are spending money, at least earnings won't fall down the drain, which is, I think, even worse than inflation being sticky, right? Because that like signals automatic recession once companies screw up on their earnings. I mean, then the party's over. Like if Google, Microsoft, Meta, Amazon all messed up their earnings, the party would be over. Forget inflation. We're done. You can't have the biggest companies in the world not hit their numbers, right? It means there's a significant slowdown in the economy, and we've all got to brace for impact, especially after being up, 30, 40% over the past year on all those companies. So things will get choppy. The fact that earnings are good and people having jobs makes earnings good is important. And that's why the S&P right now is at 501 and not really below 500. QQQ 423 down 0.36%. Now, when Jerome Powell speaks, everything can change. When Powell speaks, this thing can all go to shit. But we'll see what Powell ends up saying. 10-year bonds, I think they're at 4.6. They're not really moving that crazy, honestly. It's actually down today. It's probably because unemployment came in a little bit better than expected. But theoretically, you would expect that to be up. But the bond markets are interesting. Here's the 10-year. Here's the 10-year, 4.645. So that's down a little bit. Oh, DJT. Wow. I can see that headline right there. DJT is $50. Really? Trump's at 50? Wow. Trump's up 5%. Oh my God. Trump's up 5%. DJT is up 5%. Well, I guess Trump has been a good hedge against the tough economy. Where's Bitcoin? Oh, don't tell me Bitcoin's down. Don't tell me Bitcoin's down. How bad is it? No, it's got to be up, right? Please, 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 please. Bitcoin, I mean, it's kind of flat from the morning. It's nothing that crazy. It's at 57,414. It got to 57,163. Oh, wow. We were about to go below 57. Then it just rebounded on a green candle right back. Oh, boy, oh, boy, oh, boy, oh, boy. Oh, boy. Let's see with Bitcoin. I'm surprised Robinhood's green with Bitcoin being red. I imagine, but Robinhood's going to go red relatively soon. That's actually surprising. Robinhood's green right now. Bitcoin 57,435. Alan, thanks you for the $5 super chat. Says thoughts on big tech raising capex yet AMD lowering guidance. Well, it's a very interesting question you bring up. One of the reasons why a lot of these companies have taken a little bit of a haircut, including Meta, is that, and Amazon, affirmed last night, capex is increasing, capital expenditures primarily around AI infrastructure. AMD lowering guidance, but capex going up for big tech basically creates this weird paradox of AMD being a beneficiary, supposedly, of this capex being raised. So why is AMD going down? Well, one could argue, and I'm still looking into this, but sort of my thoughts on this, because I was thinking about this last night, so it's really good that you bring this up. AMD's not getting the bulk of that revenue. It's going to NVIDIA. It's going to ASML, right? It's going to all these other companies. Now, look, AMD's part of that whole supply chain ecosystem, right? So they should be deserving some of that. But the GPUs are what these companies are spending on. The H100s, the H200s. They're not spending on the CPUs. And at the end of the day, AMD does do some work with GPUs, but at their core, they're a CPU company versus a GPU company. GPU is more generative in the context of generative AI. So from that perspective, and ASML creates a lot of the servicing hardware for the GPUs, right? So like all these companies are part of the ecosystem, but Intel is not going up because of CapEx guidance. AMD is not going up because of that. SMCI, which theoretically should go up because NVIDIA is their biggest customer, but their numbers, I think the market thinks they're in a bubble right now and the growth's not sustainable. They're not going up. But NVIDIA probably should. NVIDIA should be the direct beneficiary of Amazon ordering another couple thousand H100s, or Tesla going from 35,000 to 85,000, right? If that's not priced in, you got 50,000 more H100s you can add to the revenue pile when it comes to NVIDIA. So NVIDIA should be benefiting, which is why we're seeing NVIDIA have some green candles right here, down about 1%. But the rest of the companies are in a tough situation. DJT up 6% right now. SoFi's up 1.55%. Robinhood 1653 up 0.21% on the day. Oh, Palantir. Wow. Palantir's above 22. Why did no one say that in the chat? Wow. How did that happen? No one said that in the chat, huh? Everyone was so sad looking at their red. You guys know at the end of the day, Palantir is like, dude, all these other girls, not guys, girls. Wow. Was that a Freudian slip? Oh my God. All these other girls are side chicks. Okay. Palantir is the main. I got to get updated if it's running green. I didn't even look at, I ignored the main today because I was looking at all the red. Palantir 2209. I'm curious, why is it running? Why is Palantir running? That's weird. That's so weird. Is Neo up? Neo had 15,000 deliveries. Neo, they are, oh, that's great. Neo's green, 2%. Not bad for Neo. They're actually green. So nice deliveries on Neo. Why is Palantir green, dude? Why is Palantir green? Thanks, Kelly, for the support. Man says zero side chicks. Thanks, Kelly. Why is Palantir green, dude? They don't have any news. Kathy did buy some shares yesterday, but that's nothing crazy. That's very interesting, dude. I don't even know. I don't even know why I'm trying to find why are they. I don't know. I mean, they had the partnership with Praxel last week. That's weird, dude. Maybe the market's following Kathy and they're buying some of the stock because I don't know. That's interesting. I don't think Palantir should be green today. Today has been a red day for a majority of the market. SoFi 691. So interesting that Palantir is green, but I like to see it. Celsius down 1.1%. That's hurting. Probably hurting a little bit from Starbucks. Let me know in the chat. Do you guys think that Celsius benefits from Starbucks going down? Like Chris was making this argument that Celsius is like $2, Starbucks coffee is like $7, and so people are getting their caffeine and their energy from energy drinks and from like Celsius. Do you think that's a benefit of Starbucks going down? Actually, oh, Chris is in the chat as well. Chris says enterprise spend is not slowing down. Yeah, I mean that's another thing. I think that's why Chris closed his puts. I think he made like $300 on Palantir. So he closed his puts. And one of the reasons he told me he closed his puts is because Google and Microsoft showed that enterprises are willing to spend. And if they're willing to spend, Palantir should be a beneficiary of that spend. Maybe not, entirely in Q1. Maybe it's down the stream. But Q1, the guidance, I mean, dude, they have to raise the guidance. There's no way they're going to keep the same guidance. I just don't think it's going to happen. I think they have to raise it. And then we've seen deal after deal after deal after deal over the past 3 months. I mean, we have had an enormous amount of deals when it comes to Palantir. So that should be setting itself up for a pretty good beat on earnings. I mean, let's just go to their IR right here and look at some of the news they had. And a lot of these have been in the healthcare space as well. So right here, you can see since 2024 started, we've had 16 pieces of news, right? Let's say 2 of these are like not that important when they're announcing their earnings or whatever. So like 13 big pieces of news. Option Care Health, University of Colorado Medical Campus, Australia Coals Partnership, Ukraine Mining Partnership. They won a bunch of awards. Bahrain's energy production, Army for the Titan deal, AIPCon. They had another one, Ministry of Education in Ukraine, electromagnetic contract. They were awarded a vendor for Department of Defense Chief Digital AI Solutions. They had a deal with the Colorado Hospital. Oracle deal, that was a huge deal. I mean, they had some really good progress this year. And then that Bloomberg piece said they had a crap ton of boot camps. They had a crap ton of boot camps. And so I think that's what got the street excited. Let me actually play this clip right here. I played this on the market close last week, but I didn't play it on the market. Girl who got into a big debate with Steve Wise on Tesla. She's bullish on Palantir. And this is her justification for being bullish on Palantir. And read which is why that Bloomberg article, maybe we don't care that much about Bloomberg, but it is a very reputable source for people in the business world, and they take that stuff seriously. And like even when you hear her talk, it'll sound like that Bloomberg article was enough to really convince her. So here we go. This is what she said.
Needs to break a 4-week losing streak.
Yeah, I mean, Palantir was an AI company before AI was cool. This is without a doubt. I think there's no other software company that has the scale of the military contracts. And I think it's a misunderstood company because that's what most people think it still does. They continue to get big awards from US and US friendly countries. But really what I'm excited and why I bought the stock is what they're doing on the commercial side. They've been doing these within their AI platform, these AI boot camps. Last quarter, that was up 70% year over year. The commercial revenue, just plain and simple, was up 30%. The stock made 3 cents, the earnings 3 cents last quarter. I think this is early days for them. They're hiring a sales team to really go after the commercial traffic. I think that they're so trusted. Their earnings come out at about 9 or 10 days. I think this is one to watch. That has a lot more upside.
Shares are up 3% here today. John,
does my mic still suck? Does it suck or no? Let me know. Is it still good? Let's see on my side. Oh no, my mic's good. It's good. Okay. Yeah. So as you can see, when she talks, right, she's basically saying, yeah, the boot camps are scaling. They're an AI play. They're a government business, but they have this commercial side to them, and that's why she's excited. Palantir right here, 21.98. Wow, look at NEO up 8%, above $5. Not bad for NEO, guys. A lot of people have been bag holding the crap out of NEO over the past couple of weeks. So nice to see NEO surge on some good delivery news. But yeah, so we'll see. We'll see what happens with Palantir. But overall, it seems like the people are a bit more excited. Let me know if the mic gets bad in the next couple of minutes or anything. But it should be okay. Okay, so there we go. Yeah, Palantir's still holding 22, dude. Incredible to see it hold 22. SoFi trying to make a run back to $7. Look at this. We're gonna be so excited. SoFi is fucking $7 again. Like, that's crazy, dude. That's crazy. It would be so nice to see SoFi back to $7. That would be nice. If Jerome Powell isn't crazy today, time is 2:30. If he's all right, maybe things aren't horrible. And I don't think he's going to need to be super hawkish. Pfizer's up 5%, not bad. And the other reason why Jerome Powell doesn't need to be hawkish is because he has time. Like in the next 3 months, if inflation gets that bad, then he can be like, all right, guys, screw it. We've got to go Paul Volcker. You don't need to be like that right now, dude. And he knows that. And so I don't think he's going to show that tone. He's not going to have that type of aggressive energy, along with the fact it is an election year, dude. We're going to get a cut before the elections. Like, it is what it is. Historically, that's what happens. And maybe that doesn't happen again this time. But if we're going to get a cut, then we're not going to signal that we're not going to get a cut 9 months later. I don't think that's going to be the case. So we'll see. We'll see. Speaking of Palantir, I don't know if I told you guys. I think I might have told you guys, but I'm going to be at their conference on May 7th. Their earnings is May 6th. So I'll be with Arnie, and Arnie and I are going to be in DC. We got invited to their conference. It's not AIPCon. It's this government conference, and we're going to make a vlog there and stuff and show you guys everything. But we're going to be at Carp's Talk. And I don't know if we're going to get to meet Carp. The point of contact we have at Palantir says we're probably not going to get to meet Carp. So don't know if we get to meet Carp, but we do get to be in the vicinity of Carp. And it'll be like a concert, dude. There's 8,000 people that are showing up to this thing. And so it's going to be really fun to see Carp talk in person. I've never been to a concert in my life. I've never been to a real concert ever. I never liked the concept of a concert. But this keynote is going to be my first concert. I'm going to be straight up fangirling, dude. So it's going to be fun to see. And I think that's going to be the day after earnings. So it also is nice timing because if they crush on earnings and then Carp crushes at this event, SoFi above $7, Robin at 16.53, then maybe it'll be due for a good beat going into going into earnings, which won't be that bad. There is no Karp interview. I promise on that. There is no Karp interview. I would tell you guys that there is absolutely no, there's no Karp interview. It's like his time is so limited even being there. So I wish there was a Karp interview. There's not. Maybe one day, but yeah, not this time. But it'll be fun to go see, what this Palantir event looks like. Michael Rosen says, Amit, if lowering rates increases inflation, what can he say that makes this whole thing better? Well, so I'm happy you bring that up. One can argue that lowering rates does not increase inflation. And I know that sounds crazy, but if we look at this piece of news that we got this morning, which is a piece of news that suggests that we need to lower rates like ASAP, United States mortgage applications fell 2.3% from the previous week, extending a 2-month decline of 2.7% from the earlier week. People are not applying to buy homes because the mortgage rates now are at a 7.29% 5-month high. And so why does this matter? Well, if people aren't selling their homes and people aren't buying homes, primarily because mortgage rates are high. If you sell your home, you're going to have to get a 7% mortgage rate. If you buy a home, you're going to have to get a 7%. Like, you need to lower the rates in order to get interest rates to come down in order for, ironically, shelter to kind of ease up a bit. So one could argue that if inflation doesn't ease up, we printed $7 trillion in a pandemic, which was opposite to what we should have been doing. What if the opposite of what we need to do, which is instead of raising rates, we lower rates? Because if you raise rates, like logic, if we raise rates another 25 basis points, mortgages are going to go to 8.2%, 8.3%, round about that range, give or take a couple hundred basis points. Like, how is that going to help inflation? Like, that's not going to help create stability and people buying and selling homes. Like, that's not going to help. So from that perspective, one can make the argument we need to lower rates. And I don't know, what that's. I know Jerome Powell doesn't want to do that. I know he wants to see inflation come down naturally before he even thinks about that. But maybe that needs to happen for things to get better. So we'll see. We'll see. But right now, raising rates is not going to happen in my opinion, but lowering rates is not going to happen either as well. Philip says that's almost crazy enough to work. I agree, Philip. That's dude, we printed $7 trillion, dude. We did not need to do that, and we fucking did it. And so it's like, maybe we need to do some other crazy shit. Like, maybe we do. Maybe we need to do some crazy shit in order to get this to work, dude. Maybe. It's so wild. It's so wild. But let's see. Let's see how it plays out. All right, guys. That is it for me on the market open. Let's get one last look at what we got. Palantir 2206. NEO is up 7%. Nice for NEO. NVIDIA's down 1.62. DJT's up 1.9. SoFi 697. Robin at 1654. Tesla 183. Basically flat. PayPal down 2%. CleanSpark down 2%. MicroStrategy down 3.5. Bitcoin still in a range at 57,280, looking like it might fall below 57. And the rest of the market holding up okay. Amazon 181. Amazon up 3.7. Not bad. Not bad at all. People are selling crypto to buy NEO. I don't know if that's the best move, but I mean, if they are, then I mean, look, NEO to me fundamentally, it's not a broken company, but it is a very tough company in a very tough situation in regards to China. And their, battery swap technology, that's really interesting, but I don't know if it's really that competitive long-term with BYD or Tesla. But does it deserve to be at $3? Dude, I bought NEO at $3 in March of 2020. And I sold that sucker at $6 thinking I was hot shit. It ran to $60, dude. I would have been up 20x. Maybe it's good. Maybe it's good I didn't get that 20x because maybe I would have got too cocky and I would have been like, I would have thought like, oh, I'm the shit. I can figure out investing. Because when you get a 20x on your first investment, you have to be of the assumption that stocks only go up, right? And I actually was humbled on my first investment. Instead, I invested in a biotech company that did a reverse split. And instead of 20x to the upside, it felt like 20x to the downside. So I was humbled more. And maybe that was actually better than holding NEO. But nonetheless, I'm happy that NEO's up because a lot of people have been holding that one for a while. Okay, word of the day for today. There's no way I get this wrong, guys. There's just no way. Haku. Okay? Haku. No, I'm just kidding. Haku. A crown of fresh flowers in Hawaii. Haku. Okay? The hula dancer gracefully moved across the stage, her haku swaying with each step. As a symbol of celebration and honor, he presented a fragrant haku It's the guest of honor. A crown of fresh flowers. Not bad. Not bad. Haku. I like that one. I like that one. A little bit boring. Do we have any other interesting words of the day? Oh, Merriam-Webster is also boring. Cohesive. We know cohesive. Nothing that crazy. Let's do vocabulary.com. Do they have a better word of the day? Word of the day. Haku's interesting, though. Haku is an interesting one. So it's kind of describing flowers. Vocabulary is obfuscation.
Obfuscation.
Obfuscation. Okay, I still said it wrong, but whatever. The act of obscuring something to make it more difficult to understand. Lawyers are sometimes accused of
obfuscation.
Obfuscation. Yeah, nothing too interesting. But Haku, nice one in the context of giving people some flowers. Okay. I think that's pretty much it. Rodney says we get JOLTS data in 3 minutes. Should we wait 3 minutes, guys, for the JOLTS data? Should we wait 3 more minutes? Fuck it. We'll wait 3 minutes. Wait 3 minutes. Let's see how bad it is. The JOLTS data is the jobs opening. So let's do that. Yeah, let's wait 3 minutes. Let's just chill for 3 minutes. If the JOLTS data is bad, things are going to get pretty aggressive. I don't think it's going to be that bad because unemployment is fine. So JOLTS shouldn't be horrible. Let's wait 3 minutes. Yeah, let's wait 3 minutes. Let's see what happens, dude. Let me look at my portfolio. Oh, wow, it's green. We're actually up today. Not bad. We actually have some money going to the up and right. If JOLTS data actually comes in bad, which the way it comes in bad is that we have less jobs than expected, which means unemployment is going to tick up in the next few months, or we have way too many jobs, meaning inflation is going to be a bitch. Like it's like one or the other, right? So it needs to be kind of relatively stable. I think last JOLTS was like 8.7 million jobs. So if we have like 8.8, I think that would be reasonable. And we'll see. We'll see what it looks like. Palantir still at 22, Robin at 1647, Nvidia 842 right now. All right, we got 2 minutes. Let's see what's going on Twitter. Let's see what's going on Twitter and what's happening there. Again, Kathy did buy some shares yesterday, 45,000 of Palantir. SMCI, this was after hours, down 7%. Now it's down 13%. Again, this Robinhood credit card app is live, dude. It feels so sleek. It's so like, I can't get into the app yet because I'm still on the wait list, but it's a beautiful product, dude. Yo, I was listening to Vlad the other day talking in an interview. And he said something that triggered me in the context of like, you know, why Robinhood is so special. He said, we don't just employ engineers, we employ artists. And it reminded me of Palantir, right? And Shyam Sankar saying like, we're an artist colony. And at that moment, I realized, dude, this is why their product is so sticky. And I talked to one of the product designers at the Gold event. I remember I was talking to her and she was just like, yeah, we're obsessed with like design. Like when you have artists in your squad, in your company, you have people that think creatively, not just from a analytical perspective, you get a really good sort of sophisticated view of how the consumer is engaging with the product. And that's special. That's really special. And so I think that's why this credit card app is beautiful. Now, one concern I do have is I feel like the credit card app should be integrated with the regular brokerage app. I don't know why they're making it separate because like it is kind of annoying having to do that. But then again, I do get like you want one dedicated app for your points, your rewards, your private anonymous cards. So I get the logic there, but I would like to see it integrated into the app to an extent as well. Okay, we should be getting JOLTS data very soon. Let me pull up CNBC and see if we got there. P. Morton says Artist Colony is barely 2 steps from a cult. Don't we have enough cults? I would say that Artist Colony is a cult and that it's good. It's good. Okay, do we have the data? Do we have it?
Actually higher right now, and that's thanks to strength in J&J, Microsoft, Amazon, 3M, Boeing. S&P is a bit lower. It's down 0.25%. The only sectors higher right now are consumer discretionary, communication services, materials, and real estate. A lot of earnings.
Okay, JOLTS is out. JOLTS is here. 8.488 million versus 8.76. So 300,000 lower jobs than expected. Is that good or bad? All right, let's go to the markets. Is that good or bad? I think that's good for inflation, but let's see. Are the markets up? S&P is. There's a green candle. It's kind of flat though. There's a green candle. So JOLTS are 8.48 million. The market expected 8.7, which means call it 300,000 jobs less expected. previous one was 8.6, which means jobs are slowing down in terms of the ones available. Now, granted, we still have 8 million jobs open, right? But the number of jobs are slowing down, or the amount of jobs are slowing down. That's good for inflation. That's good. That's technically pretty damn good. And also, dude, like no one can say, oh, the consumer is like running out of choices. There's 8.5 million jobs. There's a lot of jobs for consumers. It's not like we're running out of jobs. Yeah, there's a green candle. We're green on this. We should be green. We absolutely should be green. That's some good news. That's not bad. QQQ 422. We should be green. We should be green on that. That shouldn't be bad. That shouldn't be bad. So a cut may be coming. I mean, not yet. I mean, maybe September. It's still in play, but this is not going to signal a cut. I think Jay Powell, Google's up on this. Jay Powell should be happy on this news. Robinhood's down a little bit. SoFi 690. Where's Bitcoin? Is Bitcoin moving? Is Bitcoin moving? Bitcoin's moving up. There we go. Up a little bit. Look at that green candle. So Jolts comes in 300,000 worse jobs than or lower jobs than expected, which means we have this is recessionary to an extent, but like it is recessionary, right? Because there's less jobs than expected. So one could argue that businesses are shutting down, yada, yada. However, there's still 8 million jobs, dude. Like if you're an American and you need a job, you've got 8.5 million options. Maybe they're not the best jobs, but there are jobs available. Some of them are McDonald's jobs and some of them are also jobs at consulting firms, right? So we do have jobs available. It's not the craziest. Now, granted, if 95% of those jobs are like minimum wage jobs, bad jobs, then yeah, it's then it's like, yeah, it's not the best situation. But it doesn't seem like that's the case. So not bad. Not bad at all. S&P right here. S&P is not crazy green, but it's at least not super red on this news either. Okay, that's it for me. I'll be back, guys, at 2:25. Jay Powell speaks. Make sure to get some lunch. Be there. We'll be there into the market close from 2:25 all the way probably until like 4:30. And so it'll be a long market close, and we'll see what happens with what Jay Powell has to say. Thank you, everybody, for being here. Appreciate it so much. I'll see you guys in a few hours. Have a good one, and see you guys in a little bit. Bye, everybody.